Well. Welcome, everybody. We have producer price index numbers out. And they came in softer. Interesting. And then the jobs, unemployment claims came out, and that was light. But wait, unemployment being light, well, I guess that goes to the Fed's mission of full employment. But it doesn't exactly support prices going lower. As far as interest rates, I don't know. Mixed signals this week as far as CPI and PPI go, and we'll kind of see how this pans out, I guess. So, welcome, Don, Dan, Wade, Jeremy, Sergio, Robert, Michael, Kenneth, Donald, Eric, Rob, Jan, Cliff, Ed, Svenborn, Rollin, Mmuku, Larry, Jaquise, John, Gary, Craig, Darren, Terrence, Lex, Laura, Anthony, Arturo, Joseph, welcome everybody. If you want to chat with me like all the fine folks saying, hey, good morning, all you got to do, click the link over here where the monster can is in the corner, the subscriber button. Be a subscriber on the channel. A few seconds later, you can chat with us while I am live. I'll probably stay live for 45 minutes or so. And while I'm live, you can chat. When I'm no longer live, you'll have to leave a comment down below. While you're doing that, you might as well check out the description. There's a button in there, $5. You can get the market roadmap line. I'll use that quite a bit today. And there's a masterclass. You get a weekly watch list. You get pretty cool stuff. And it's the tool I use all time frames, all through the day. I'm actually trying to build an automated whole automated system that alerts on this thing, like scans for these setups on smaller time frames, and sets it up. So it's kind of cool. And working on that in the background. Maybe even integrate AI. I don't know. We'll see. I'm kind of have my AI project is kind of separate from this, but yeah, may cross the boundaries here, come together. So anyway, we have that PPI number right there coming in at 0.2. We were expecting 0.3, and for whatever reason, it shows up as red when actually it's probably opposite of that. It's probably green when it's lower, and red when it's kind of like yesterday. The numbers were highlighted green, but CPI coming in higher is a red number for economics, not I don't know. I guess it just colors red and green for higher and lower, but it's kind of backwards thinking there, because going up is bad for producer prices and for consumer prices. I thought we would just hover. When I was talking about this yesterday, we just kind of tend to chop on this number. We were up here, now we're kind of dropping back. I mean, we tend to oscillate right around there. They don't have I guess they don't estimate this number very well. I don't have the year-over-year number, which is kind of lame. They don't report that on here on Forex Factory. But the unemployment claims, I mean, we're basically at the resting heart rate here. Like, there's just there's about 250,000 dum-dums get fired every week and go file unemployment. I mean, when you got 300 million people employed, or 200 million, or whatever it is, 250 million, well, getting 250,000 that get fired every week, I mean, it just kind of makes sense, right? Fire or quit or whatever, go file unemployment. So basically back to the resting spot. I mean, look, it's the resting, like, little variations you can't really read into it. All right, before COVID, we basically were right in this ballpark. COVID hit, it spiked. Finally, we've come back down, and we're basically back at the resting spot. Now, you go back here, on back, yeah, when there were financial problems, housing problems, and these are normal kind of indications of curves or problems. Back here, I remember this one. Back in this zone, .com bust. That one wasn't nearly as big. When this one, housing bust, a lot of job losses weekly, and then we rolled on forward. Everything kind of got normalized, and then we did COVID, which was just ridiculous and blows out this chart, and then we're mostly back to normal again. This normal ebb and flow in the economy. So, and actually, pre-COVID, we used to sit up here 250 to 300 on a weekly basis. Now I kind of feel like they're depressing these numbers a little bit to try to keep them super low. Think about it. Like, with so many millions of people, we can probably all think of a few people that, probably get fired every chance they get. I know a few people that have been through a lot of jobs. So anyway, I feel like the job number just kind of, hey, we get it every week, but does it really mean much? Unless we get an outlier that pops way above one of these, not really. Not really. I guess the trend is what you got to look at, and they go back and correct these, and we don't even have the correction. We just have everybody pays attention to the headline number and not the what gets revised next month and the month after that. I mean, it's hard to read into a number that's just a bunch of estimates. Tomorrow at 10 a.m., we're getting preliminary consumer sentiment. We get like these consumer sentiment numbers almost every week. So we'll see what comes in here. We've been on the rise. We kind of went through this epic low here in 22. We've been on a rise, just like the stock market. You can almost see the ebbs and flows in the stock market right there. We feel more confident when the prices are going, when stock market prices are going up. Feels good, but we haven't really returned to any kind of confidence level where we were before COVID. And we used to run up here in the 99%. Why does everybody feel like the economy's bad? Well, because consumer confidence is pretty low. We haven't really recovered. COVID we dropped, and then we really dropped when the market went down. And we haven't really recovered this right here. So I think that speaks a lot to why we all feel like things aren't so great. Right there. I mean, this is like the true read. And my favorite subscriber, Kimberly, jump in the chat, saying, "Hey, everybody." My lovely wife, Kimberly. And so that's probably more accurate on how we're all feeling than any other number I've seen right there. So, Pal's favorite number, PCE. Let's pop up and go on the calendar and look. This is just forexfactory.com. You click the calendar button right up here. And we start rolling down. We get some on Monday next week. We get core retail sales, Empire State. We get nothing. We just had PCE like right after FOMC last time, or right around it. Unemployment claims, Treasury currency report. Oh, that's always an interesting one right there. Next Friday. So it looks like probably near the end of the month. Let's see. PMI. I don't have all these numbers memorized, like when they come out, because there's so many. There it is, right there. Core PCE. So Friday the 26th. Core PCE. So we got about 2 weeks for that one. And they keep talking about the June FOMC. It's usually 6 weeks between. Let's see. Yeah, there's another FOMC right there in May. May 1st. That's what I thought. Everybody keeps talking about the June FOMC. There's one in May right there. So we'll see what happens. It's 3 weeks away. And a big reminder, tomorrow kicks off financial earnings. Dun, 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 dun. Q1 earnings kind of kick off. I don't even have that was not the earnings for this week. And Windows updates don't reboot right now. All right, let's see. Find this. Nope, that's not it either. Jeez, Zimity Christmas, man. I had it up on a tab, and now I don't even see it. Oh, there it is. There it is, right there. I covered it up. So JPM, Wells Fargo, BlackRock, Citibank, Progressive, State Street, right there. This kind of kicks off the financial earnings. Tomorrow, I guess before the open, we have a few stragglers, probably reporting from last quarter. These are really kind of the kickoff. And, notice this is kind of devoid this week as we wrap up the last quarter and kind of roll into the next quarter. And these financials are kind of where we're kicking it off. Next week ought to be more exciting. And as I showed earlier in the week, we have kind of the blackout window ramp up. And let me grab that really quickly out of the right here. You can see, this was Friday. We're kind of sitting right here. This is S&P 500 companies in their blackout window. So when we get over here, that's when the majority of the as we get into that FOMC time, that's when the majority of companies have reported earnings. And then we'll be on the FOMC and the long tail here as earnings flow out to June. And then we do this all over again. We do this whole thing where we start ramping back up again. As we roll into reporting earnings in July. Craziness. It's the cycle keeps coming around, whether you like it or not. Going to have earnings every few months. So, all right. That's enough about that. Enough about upcoming things, I guess you might say. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may never get something right again. That would kind of suck, but hey, it's what we do, right? Try to get it right. Sometimes I don't get it right. And this presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything. All right? Don't buy stuff from gurus. Don't buy financial instruments. Don't buy stocks. Don't buy options. Don't buy bonds. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy treasuries. Don't long them. Don't short them. Don't trade them. You can, there's substantial risk of loss in all of those things, even treasuries. I mean, think about it. There's a buyer, there's a seller, there's a winner, there's a loser in every single trade that gets done. So if you desire personal financial advice, hire and consult a financial advisor that has a fiduciary duty to give you advice based on your situation. And enough about that. Hopefully, we all understand that I'm not the one trying to tell you what to do. Alrighty, moving on. ES, this is S&P 500 futures right here. Getting a nice little pop on that PPI number, PPI, Producer Price Index number. Nice. Started at 8:30, ramping right up. Find a little resistance here at the 15-minute roadmap line. If we poke on through, we'll probably go test the 30-minute. We get above that. Well, looks like we need one final lower low there on this correction. And this could be potentially a reversal point here. That's a very strong move up off the lows. We didn't see that here. We didn't really see that here, although we did right there, but that was from a higher. So it's not really, we didn't reverse off that big spike down. This one right here, we dropped right into that number and then nice reversal. That's kind of that may have been the last straw. And this is one to watch right here. We may go higher. I've kind of been holding that the S&P really kind of needed one more go right up here around this 5370 area. And if we look at the actual cash index, that's right up here around 5300, possibly a little higher, but that's where it would take us right now. Right up in there, possibly right at that 5300. That's what's going to make it all look pretty dang good. So if you wanted to just have the fib line that high right there from the 28th of March, right there to the low, basically what we made yesterday, because we're probably going to open green, and comes in right there at 5300. And there's the open, and there's the pop. SVXY went through a split. So if you're if you were holding any SVXY, you're like, oh my gosh, what happened? It was a split. And basically I'm going to have to remove all my drawings because now I'm going to have to redraw the whole dang thing. All these oscillations. There we go. I don't know if it's going to be as tradable anymore. We'll see. Depends on how it responds. Maybe it makes it more responsive. I don't know. We'll see. I'm still holding some options, so we'll see what happens there. Hey, there's Goose. Morning, morning, Lieutenant Colonel retired. And check this out, S5FI rolling on down. That stock's above the 50-day. Getting down here like we were in February. What happens if this drops to the bottom? Stock's above the 200-day, rejecting off of that high. Is that the high? Do we start down from here? What I would like to see is some divergence on this, where we make a higher high on the S&P, and both of these kind of make a lower high. Then we roll. In Q, Major John, good to see you. In Q right there, kind of hovering. We made a higher low yesterday. This was the indication to me we were probably about done on a correction. We made a higher low on NQ. Now starting up, we break up back above these, like you see these candle bodies right in here, around that 18,350, 18,400-ish area, right in there. Break above that, we're probably gonna come back up, retest this channel, maybe even make a higher high from outside the channel, and then watch out, because we're starting to indicate some weakness here. Russell poking out yesterday, trying to poke back in. We may rally, like I said, we may rally right back up to here before we go down again. We got really dang close to the point where I wanted to go down before we rallied back up again. CL triggering some alerts overnight that we're potentially breaking higher, and then I wake up this morning and retracing, just staying right in the zone, consolidating. The next pop right up here at 90, kind of where I expect it to pop up to. Now, could we retrace? Absolutely, we could retrace. We could come all the way back down to this roadmap line, all the way back down here. Remember, I said that was available. If you click the more button down below the video here in the description, that's available if you want it. This orange line. If you're too cheap for $5, though, it's in a video back. You'll have to look in the history of my videos. You can go find it. I gave you the code and everything, showed you how to use it, all in a free video. So it is possible that we do a retrace back down here on CL. That's support, that's resistance. So 90 on the upside, 80 on the downside, and we're sitting in the middle. So it's like a $5 coin flip at this point. GC, just churning right here. Is PPI bullish or bearish? We're holding. Let's see, retrace right there. We're still below that 618 first drop. Retrace, that can lead to another drop. Highly cautious right there. You're like, well, I don't see it with 3 candles. Check this out. Right here. A little more clear. That drop right there. We can clean it up just a little bit with tighter data. That drop, this retrace, we hold there. It can lead to another move down. And we kind of immediately did it right there. Didn't make a lower low, kind of churning. We pop up. We can go down one more time. Just not sure on gold. I'm not sure I'm fond of this churn sitting right there. You know, the last few times we've hit the roadmap line on the 30-minute, we've popped right off. This time we're just kind of stuck there churning. That's not strength. That may result in a bigger time frame correction, which when you look at the daily, we've been going straight up. What do I say about stuff going straight up? You gotta watch out. It's going to retrace sooner or later. Sooner or later. Now, we could retrace from much higher. I mean, we could go up to 3,000, 5,000. I mean, look at NVIDIA. Look at SMCI. I mean, look at MSTR. There's some of those have been absolutely crazy. Even Bitcoin. I mean, look. It was going straight up and then hit the wall and kind of turning right here. I do expect, with the way this shaped up right here, we're going to pop this 77,000. Then that may be the top right before halving. So keep an eye on this. We're finding a lot of resistance right there. There seem to be some sellers coming in with some coins. This halving event, if you're new here, welcome to the conversation. Bitcoin halving is coming up. Halving itself is not necessarily bullish. It's the supply shock that occurs after halving that tends to be bullish. That supply shock tends to take 200-ish days to really get going. So that puts us out into, let's see, there it is, December, right there. Puts us out here before we really potentially start getting going after the halving. All right. So don't get bummed out that Bitcoin doesn't move for a couple months. That's exactly the psychology thing that we expect to happen. And with the way this is, we could pop it and do a drop, do a correction back down here to the 50,000 area. We could kind of sit there for a couple months, and then we actually start rocking and rolling. Now you may be like, JT, what are you talking about here? Look back here. Here's the last halving. Back in 2020, we were kind of rocking along. We rallied, we dropped, we rallied up into it, corrected a little bit, just sideways choppy. Oh, a little excitement. Nope, we're going to correct it back out. And then all of a sudden, we took off. We made a high. And I was like, oh, let's correct that back out. And then made a new high. Everybody was real optimistic. And then we corrected that back out. And then everybody's talking about crap, about Bitcoin down in here, how it's going to zero. That was the end of the party. And then we ramp up and make a new high right in front of halving. Now, if you're like, how do I know when halving is occurring? That's what we've got right over here. BitcoinHalving.com. We got about 1,200 blocks to go. Bitcoin transactions are minted in blocks. It's about 8 days, 9 hours. They did increase the difficulty last night or yesterday afternoon, and it got more difficult. And that's interesting. I must have clicked on something. There we go. We've got about 99.4% of the way to the halving. They've kind of changed this a little bit. And if we look at the difficulty, there you go. We're actually running 9 minutes ahead. Still, even after the difficulty ramped up. We ramped up about 3 point, whatever it was, almost 4% more difficult. And next adjustments in 12 days, but the halving is in 8 days. That'd be interesting to see the dynamic that plays out here as we get into the halving. So there you go. Hey, Mara. Mara just nailed one. Right there. You can see Mara hitting. That's pretty cool to see. You can see the different pools. And occasionally there'll be one that's like unknown. It's just a random person or a random group of people found a block. Most of the time they're in these pools. And any questions, you can let me know. Is it a buying opportunity? Well, you tell me. All right. Moving on. Ethereum right here. Not so sure here. We may see, this is a bearish setup right now. I'm highly cautious. We may see a knee-jerk reaction here. And Bitcoin could get affected by this. It doesn't make a lot of sense, but it could get affected by this. If we see Ethereum classified as a security instead of a commodity like it currently is, it's going to wreck the spot ETFs that are supposed to come out in May, right here. It's going to wreck the plans of that. And it may cause an immediate knee-jerk reaction that could come to here or even lower before it recovers. All right, right now we've got this potential, this A, B, and a C would complete that right down here, back around 2,600. I've talked about this for a few days that I was going to lighten up on Ethereum. I did yesterday. I lightened up on Ethereum exposure. And after we find out what shakes out, I may add it back. All right, remember, spot ETF on Bitcoin getting approved. That was right back here. Look what we did. We sold the news. We could have gone down to the roadmap line. We didn't actually go that far. At least not on the daily. We did on the, I believe it was the 4 hour. Yeah, right back there in January, we poked below the 4 hour pretty substantially. Could have gone lower down to the daily, but we didn't. Then we went on this epic rally. So spot ETF approval on Ethereum, with or without the SEC, monkeying with it, may be bearish immediately, give you an opportunity to buy before. Now we could ramp up into it, then pull back. I mean, like, we went back to where we were in November, basically. So I'm just going to sit on the sideline for a little bit and wait for that volatility and everything to shake out in Ethereum. If I miss some upside, so be it. I've still got my Bitcoin exposure. I don't, the risk is too great for me at the moment. In that, I mean, the SEC definitely, I mean, they even filed against Uniswap last night or yesterday afternoon. So I don't know. Seems sketchy to me. Dollar churning. I said we were 70% likely to go tag that 105.50. We're in the neighborhood now, 105.20. Not far away. Now, could we go higher? We could. And if we break above that, we're probably heading on up here to 109. That's something to keep an eye on there if you're interested in the dollar. Now, what's actually moving today? ALP. Look at that, baby. Popping. Nice strong candle yesterday, then a big pop. And that's a biotech. And I caution on biotech because they don't always follow the patterns. Sometimes they just do wild, crazy stuff because the FDA gets involved. And at this point, I don't really care. I pull them up and I talk about them, but I'm not interested in trading any biotech or medtech or any of the medical stuff most of the time. I was like, maybe there's a 1%er, like GLP-1 drugs. That's a fundamental change. It's something you could take advantage of. But those charts have already left the train station. And, should have been in on that back here. Because, whoo, baby. Now we're getting a retrace. We'll come back to the roadmap line. That's another opportunity for the next leg. And the other competitor, Lilly, same situation. Should have buy back here because these are outperforming even AI stuff. Just been crazy ride up. So in general, I'm not big on getting involved in that stuff. Team right here. Look at that. That's a very choppy overlapping hot piece of garbage chart right there. I don't like the way this looks. That's likely to keep hanging in that channel, but market roadmap wise, if we were going to go on extension, maybe 275, but we got to get above this 231 first. Yeah. This one's showing up again as a popper today. It was a dropper yesterday and showing a red candle. I kind of expect this to come all the way back down to this $10 area once the hype gets done. Whatever's going on. I don't really care what they do. I mean, we somebody threw that in the chat a couple days ago, but I don't really care. The chart's all I care about, and the chart says it's probably coming down before it finds any kind of base there. There's another therapeutic working on this kind of thing. Could we break out? Sure. It's going to have to get above this 48 area to indicate it's going higher. And the roadmap line is the support zone right there. So it may drift on lower till we get down there. FNGU, that's a 3x leverage ETN, exchange traded note, and lasts till January 2038. And it looks like that wants to come back down. This keeps consolidating. We could pop one more higher high. Then watch out. That's going to flow with the, it's basically FANG, micro sectors, FANG, index 3x leverage, blah, 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 garbly gook. Eventually, that one's going to retrace. Eventually. Dash. DoorDash. Oh, it's fully cooked on the upside too. Can it go higher? Well, they can always go higher. I mean, it used to be way up here. And used to be, used double topped up here. IPOs are not bullish, and that's what you saw right here. This could be a new bullish trend. It could go much higher, but we're probably going to need a retrace before we do it. LABU, still churning under that. Downtrend of the highs. This is leverage on biotech. So you take all the things I said about biotech, combine it with leverage, and this is super dangerous right here. So be careful. STZ. That looks like it wants to churn. Like that's just churning. Rejecting the prior high. Constellation Brands. It's restaurants, if you didn't know. And I guess alcoholic beverages, sorry. And just churning. They sell alcoholic beverages at restaurants. So, I mean, it's like consumer demand. You know, could this ramp off as the economy gets bad? Sure, alcoholic beverages tend to do good. But as we see from our friend Bud here, just turning right at the roadmap line. We ramped up and came back down and just sitting. And Canada Goose. Not looking so hot there. This one was really ramped up. Pretty hot in COVID times. Coming off that low and lower low. Ouch. IZM. Internet retail. That's a ridiculous move. I'm not sure what the story would be here, but unless they invented a new product that just fundamentally changes the internet, they're probably going to come back down at some point down here. Rent the runway. And it's coming up into resistance right there at 14. Watch out. That did a reverse split. That's not bullish. That just allows fewer people to buy up the liquidity. Elf Beauty. Potentially going to hit the roadmap line and turn higher once we get above this 197 to 200 area. 241, possibly 265. And EMPH. Sitting right below the roadmap line. That's bearish. AZN. AstraZeneca. Just at these prior highs. Nothing to see here, basically. Yeah, nothing. That's been chopping so long, I wouldn't expect it to do anything. Right there. Nike. Right back down to the bottom. This one's like 70% likely to get an extension on down this 80 area right here. Possibly even down to 68. ALB. Probably going to rally up and hit that resistance at the roadmap line. It was up $1. It was up a little more pre-market, but that looks like it's going to flush down further before we get done. Decliners, KMX. Oh, used cars must not be doing so hot. Carvana on here too. Right off the prior resistance. That was support. Resistance spike. Resistance. Oh, resistance. The way that all chopped up right there, that may result in a lower low down here around 40 for CarMax. GL, Globe Life. Oh, man, look at that. Once they give up, they go deep. That low, that high, right at support right there. Could come down to this $70 area. Want to watch it find a bottom. If it's going to go higher, we want to watch it find a bottom here. If we don't find a bottom here, if we start getting on down here, probably come down to 30 to 40 area right down here. Love is just chopping sideways. The love sack. I don't even remember why I drew a blue line on there. That's a declining set of highs. That looks like we're probably going to go lower low. And so right at support, if we're going to turn this around. Oh man, that could be a head and shoulders shaping up right there. If, like that's a lot of ifs. If we're going to shape up and do a reversal. Something like that. I probably missed one of those somewhere in there. If we do something like that, that can lead to a nice pop, but if we don't hold it, you know, it's going to be like breaking out there, heading up there. Yep, right on the fib targets. That's funny because it's not even related to what we have going exactly right now. And still the same. That would be a bullish target, 44. If we break down below this right here, this is the market roadmap system, basically. Just upside down, right there. And that would be the bounce up. This would be the bounce down. 10 or 44. And we're sitting at 20. Lose 50% or gain double. Huh. Anyway. Dun, 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 dun. Imuku, that had nothing to do with nothing. It's just like Boeing has, the Boeing chart has nothing to do with doors flying off. It really bends your mind, and you can argue with me all day you want. I said, ask Goose and ask Sledge about it. I said Boeing was going back almost exactly where it is now in December. Before any doors flew off, before any problems, any whistleblowers, anything. These charts have nothing to do with the news. Bud has nothing to do with Bud Light. You can think it does, but and Goose right there in the chat. You know? I mean, you can think the news matters, but I'm telling you, the mind blower, like it really messes with your mind. Fastenal probably coming back down to the roadmap line. EXAS right there, probably come back here. FERG really wants to retrace probably. And what's funny is this, like Fastenal, Ferguson, they're all in the same kind of sector with the home builders and parts, supplies, and materials. BTU retracing, came back to test that breakout line. Classic move. Now, if we turn up here, like this is what LABU did not do. If we turn up here, this can be mega bullish. Mega bull. Talking about a potential to go up here. This is exactly what the S&P did. Not to go up to it. Let's just go to a weekly chart right here. Same pattern, different place, right here. Downtrend of highs, broke out, back tested, took off, right there. So BTU, looking for the back test and bounce. If it doesn't hold, and that's a weekly roadmap line too. Extra stuff. Doesn't hold, probably going lower. If it does hold, higher. So you can set an alert up here around 25. If we start breaking above that, we're probably heading on up here to 37. CVNA, And weak on used cars. Probably going to come back to the roadmap line. Came back over here. Get some extensions. And then move up. And probably going to come back over here. CRH. There you go. That's looks like we can see that retrace right there. Yep. All right. Could it go higher from here? Sure. I mean, they can all go higher. 90 on the upside, but 70 on the downside. That's a little, I don't know. Not one I'm getting involved in because there's no high probability until we bounce. See, we do these bounces, we rally. If we do that again, rally. But right now, I mean, it's construction materials. We're seeing a lot of weakness in that today for some reason. This week, in fact. All right. S&P bias for today. Grab my magnifying glass. Zoomer up, buttercup. Go down the time frames. Ooh, retracing a little bit, huh? Retracing the pop. Don't want to leave a gap. So jump over the ES and look. And we actually went red. A little bit red. And can we turn this around and break through? This would be a natural progression here. We rally up. We retrace to this level. Then we bounce and go. So this is your level to watch right in here. We don't see that lower low there on SPX because SPX wasn't trading when the numbers came out. So if we see that retrace, that bounce, that hold, and the go, that's bullish. If it breaks down below here, we're probably going lower low today. And we may flush it on down. You know, we could get one more lower low. Though the real level to watch on S&P is down here at 50.90-ish. We get below that 50.90 area, something different's shaping up in the market for now. Like we're probably done. You see it comes right off of that low right there. We get below that low from right back there in March. Something else is probably shaping up in the market. Why that low and not the low above it or this low over here? I'm just telling you. There's a potential for this to have finished up right here. And when we break back below that, that's the indication. That's pretty much, it's not just a spike and reverse. We could spike it and go. But if we get below there and we sustain it for a day or two, that's your indication that we're probably heading on down in a bigger way. And we could be talking about back to the daily roadmap line, back down here at 4,800. You'd be like, whoa, that's 300 points, almost 400 points. Yeah. So be careful out there. All right. Have a great day. Have a great day. I'll be in Discord and we'll see you later. Be careful out there. The account you save may be your own, you know. Nobody's watching out for you but you. It's not being wrong that costs you the money. It's staying wrong. Don't stay wrong. Know when to cut them. All right. Know when you're wrong. That's where you pay for your education. If you stay wrong, you're going to pay a lot of money and you're going to be like, oh man, I should have learned that lesson last time.